Every contract you sign with an indemnification clause is asking you to take on someone else's liability. Most contractors sign them without a second thought, assuming that their insurance has them covered. Here's the problem. Your general liability policy actually has an exclusion for exactly that. And if the clause you signed doesn't fit the exception, you didn't transfer the risk. You personally guaranteed the risk. Stick with me, because this is the clause that catches more contractors than any other, and it's the one worth understanding before you sign anything. Let's start with what these clauses actually do. An indemnification clause is an agreement where you take responsibility for another party's losses. A hold harmless clause is the same thing under a different name. When you sign one, you become the indemnitor. You're promising to defend and pay for claims brought against the other party, the indemnity. In construction, the subcontractor typically indemnifies the general contractor and the property owner. You're assuming their liability for third-party bodily injury and property damage claims that come out of the work. Here's what most contractors never learn until a claim goes sideways. The standard general liability policy contains a contractual liability exclusion. It says the policy does not cover liability you assume under a contract. Read that again. The very thing the general contractor is requiring you to do, assume their liability, is something that your base policy excludes. On its face, that means that the indemnity that you signed isn't backed by your insurance. Now, there's an exception that restores coverage. The policy defines a category called an insured contract. If your indemnity agreement fits that definition, the exclusion is lifted and coverage does apply. The standard policy lists 6 types of insured contracts, and most typical construction hold harmless clauses qualify. The key word is not all. The ones that don't fit leave you holding personal exposure. So where does this break down? 2 common ways. First, some indemnity clauses ask you to cover the other party's sole negligence. That means that meaning their fault, not yours. Those clauses often fall outside the insured contract definition, and some states won't even enforce them. Second, some carriers modify the standard policy to strip out or narrow the insured contract coverage. If your policy has been modified the way even a normal hold harmless clause may leave you self-insuring the indemnity, you have to actually check the policy language to know. So here are 3 things to check before you sign any contract with an indemnity clause. First, confirm your general liability policy includes contractual liability coverage for insured contracts and that it hasn't been modified to remove it. Second, read what the clause actually asks you to assume. If it reaches the other party's sole negligence, flag it. Third, send the contract to your agent before you sign, not after a claim. The clause is negotiable more often than contractors think, but only before your signature is on it. If you've got a contract in front of you with an indemnification clause and you're not sure that your policy actually backs what you're being asked to sign, that's worth a 15-minute call before you sign it. Book directly at the link in the description or call us at 318-423-7445. Go to callwatley.com. That wraps up our run through the contract clause that shifts risk onto you. Next week, we shift gears to something that hits your bottom line directly. How most contractors price a job and the order that quietly costs them money. See you then.